Hi, I'm Rukmini. This is the first video of this collection Accounting for High School. I'm currently studying ACCA. I graduated my SLC at 2017 AD scoring 3.85 GPA. I graduated my plus 2 from St. Xavier's High School at 2019 AD scoring 3.6 GPA from Management Phil. Today we are going to discuss about the basic journal entries. Before moving into basic journal entries, we first need to discuss about the terminologies used in accounting. There are assets, liabilities, income, and expense. We know what the income and expenses are. Income is the amount that the business receives for rendering its services or selling its product. Expense are the costs that are incurred by the organization while producing those products. Now let's move into assets and liabilities. Assets are the property of the business which can be used by the business in its own use. There are three types of assets. There are fixed assets, non-current assets, and current assets. Fixed assets are those types of assets which are not likely to be converted into cash quickly. For example, land and building. Similarly, non-current assets. Non-current assets are not current in nature. They are always greater than 12 months. The assets are always used by the organization for more than 12 months. There are two types of non-current assets. They are tangible and intangible. Tangible are those assets that can be touched, that can be seen, like furniture used in office by the managers or employees. Similarly, intangible are those assets that cannot be seen. It's like that cannot be seen and touched, like goodwill, patents of the organization, etc. Similarly, current assets are those assets that can be converted into cash quickly. It is always less than 12 months. Like receivables, the amount we need to receive, cash, stock or inventory, etc. And now let's move into liabilities. There are also three types of liabilities. There are equity, non-current liability, and current liability. Let's define liabilities first. As we know that the company is run by the directors. The number of directors in a company is always limited. The directors might have brain, but they don't have enough capital to run the business. So they raise the fund to various sources. They raise the fund either to debt or through equity. As you know, the debts are always the loan. It is taken from the banks or financial institutions. These are current or non-current. Loan is current or non-current. And the equity comes. Equity are the funds that are raised by the company through its shareholders by issuing shares. The company issues shares, the general public buys the shares, and the company pays dividend, a certain extra premium for it. So equity is liability to the company. Similarly, non-current liability, as like non-current assets, they are also always greater than 12 months. This type of loan needs to be paid after 12 months, such as long-term loans, etc. Current liabilities are those loans which need to be paid within 12 months. It must be paid in less than 12 months gap. They may be payables or overdraft, bank overdraft, etc. knowing about the terminologies, let's look over the accounting rules. Let's look at the types of account. There are three types of account: personal account, real account, and nominal account. Personal account are used by the persons or the individual firms or anything in individual. Similarly, real account are used for assets and liabilities, for assets, and nominal account are used for expenses or income. We have different rules for different accounts. In personal account, the rule is debit the receiver and credit the giver. Suppose example, cash paid to X. Here X receives the cash as X is the receiver, so X goes on debit. He receives the cash, so cash goes on credit. The number 2 is real account. This is mainly used for assets. Its rule is debit what comes in and credit what goes out. For example, purchased furniture. Here furniture is an asset, so we used real account. Here while buying furniture we get the furniture, that is debit what comes in. What comes in here is furniture. While buying furniture we pay out cash, we give cash. What goes out? Cash goes out. The next type of account is nominal account. The rule of nominal account is debit all expenses and losses, credit all income, gain or profit. Here what we need to know is if the expense increases, it goes on debit. If the income increases, it goes on credit. Similarly, vice versa. If the income decreases, it goes on debit, and if the expense decreases, it goes on credit. Let's take an example. Paid wages. While we pay wages to the employee, our expense increases. When expense increases, we keep that in debit. Here our expense is debit, so debit wages. We pay wages in cash, we don't do that in credit, so credit cash. Here while studying about cash, cash is an assets, so the accounting for assets is seen through the real account. The rule of real account is, if you remember, debit what comes in, credit what goes out. Here the cash goes out, so cash is in credit. After knowing all the terminologies and rules of account, let's look at its format. First of all, we write date, then particulars, then LF, then debit and credit. In date column, we keep in which date the transaction has occurred. In particulars Particulars is the main part of the journal. We write the journal here. So it starts with debit something account. But for credit we don't write credit here. This is not written. So for credit we write in the middle, leave some gap here, to something. We don't write account here too. After completing this one, you need to write a short narration starting with being. And just you can copy the question or you can make it in your own language. The LF stands for ledger folio. You don't need this in high school level, so I'm not explaining this. Let's not bother. So while writing in debit account, we write correspondingly. The amount is written here, and on credit we write here. We don't write in debit, we write on credit. This amount should always be equal to this amount. It follows this is the double entry system principle. The debit should always be equal to credit. So in the next session we'll be talking about the journal. We'll further be talking about journal entries, some abnormal cases of journal entries. So this much for today. If you like this video, please don't forget to subscribe. Thank you.